welcome back. Well, let's shift conversations now. We have Mr. Bismarck Rouhani joining us as the CEO, MD CEO of Financial Directors Company. Great to have you on the show, sir. Good morning.
Good morning.
Fantastic. It's good to have you, sir. It's been a while. I just got to just in right now. We'll get to other matters, affecting the economy. But I just got to just in that President Tinubu has approved the introduction of 15% ad valorem import duty on petrol and diesel. These are the reports I'm seeing right now. First off, Mr. Rouhani, we're going to confirm this very soon, but what is the expected impact of this?
I think I quite get the question.
So, reports that President Tinubu has approved introduction of 15% ad valorem import duty on petrol and diesel.
I'm having difficulty understanding or getting your question. If you can come again.
I said we just have a just in now. We have reports right now that President Tinubu has approved the introduction of a 15% ad valorem import duty on petrol and diesel. I'd like to get your reactions to the impact of this to Nigerians and the economy.
Okay, put my head right. I think you said that the price of petrol and diesel have been brought down just this moment. If that is your question, then what I would say actually is that the price of petrol is critical as a major inflation causative factor in Nigeria. If a drop of 3%, because the drop of 3% is significant, because we had a 11% increase from 841 all the way to 922. So that's significant, and it's a major driver. If I also understand the narrative, it is that the Dangote refinery, I understand, is actually bringing down the price and is guaranteeing that there will be no scarcity between now and Christmas season, and also that there will be no price increases. That's what my understanding of it. But I didn't quite get it.
Yeah, so I'm trying to understand, sir. Imagine now there's an 15% import duty on people bringing in petrol and diesel into the country. Is this bad or good for us?
I think that an import duty for those bringing in petrol is good for the country. Why it is good? Because you want to encourage domestic production. Anytime you import, you are actually encouraging and creating jobs in other countries rather than creating jobs in your own country. So basically, import protection is good. That's what is happening in the United States. That's why tariffs have been introduced across the world. But in terms of pure macroeconomic terms, it doesn't make sense for you to have all of those tariffs. A free trade world and a world of what we call comparative advantage for countries that have cost of production benefit or advantages is good for the world. Total production will increase. That's what Ricardo, if I remember right, proposed.
All right, so is it possible, or is there a risk that we can expect higher diesel and petrol prices with a 15% import duty?
No, what it means is that don't forget that the Dangote refinery and the domestic refineries high volume, low margins. What has happened is that the average cost of their production will come down, and therefore the fringe players who are importing will have to pay more, and that will encourage domestic production. I want you to remember that the same thing happened in cement, the same thing happened in sugar. Then there was some protection, and that actually increased Nigeria from being a net importer of cement. Now it's a net exporter. You have Goa, you have Dangote, you have Lafarge, and all of these people producing because of the protection of the past. But if it's protection just for consumption purposes, it doesn't make any sense. So this, as far as we are concerned, anything to protect domestic investment and domestic industry will lead to further growth, more investment, and more employment. Look at what happened to the breweries. You have Guinness, you have Nigerian breweries, you have Champion, and all of these guys. If you want to import beer, you can import beer, you pay a duty, you pay a tariff, but it's going to be very expensive. And what we've seen all of and the building material sectors expand capacity, increase production, increase employment, and more than anything else, paying dividends to the investors and paying taxes to the Nigerian government.
All right, so thank you for that. We'll definitely get more on that breaking news there, and we'll definitely continue to discuss the expected impact. But I guess no cause to panic at this point. But let's shift to monetary policy now. We didn't get the latest rate cuts in the U.S. Another 25 basis points. I guess this was expected. Any hidden undertones?
Okay, let me say this clearly. The cut of 25 basis points was expected yesterday, but the guidance that the Federal Reserve Chairman Jerome Powell gave was that a cut in December of another 25 basis points is not a foregone conclusion. As a matter of fact, he's looking at the balance of risk, both domestic job employment and inflation, and he thinks that it is most unlikely, for that matter, that there will be a cut in December. If that is the case, it means that in Nigeria, one, we had anticipated that there will be 2 cuts, 25 in October and 25 in December. Means that 50 basis point cut means that the dollar will weaken. It means that there will be more demand in those countries because the increase in business activity. But now, for Nigeria, we are also benchmarking our interest rate activity to that of the US. So one can easily say that the Central Bank of Nigeria will probably be caught between a 50 basis point cut and a 25 basis point cut. We'll now have to wait a little bit, and probably I think that what you're going to have for Nigeria, the MPC will probably cut rates by 25 basis points this time rather than 50. And also, Nigeria is raising money in the Eurobond market, as you can see, and therefore the lower interest rate environment in the US will help us will reduce our debt service cost. So for us, one, the cut of 25 basis points and the ambiguity about what's going to happen in December means that we have to slow down our own cuts at the November meeting by the central bank, and also our expectations that I think that because of that, foreign petroleum investors that are coming into Nigeria will probably hold back a little bit because they think that interest rates will remain higher. But having said that, I must comment that Jerome Powell is on his last leg. He leaves the chairman of the Federal Reserve in May next year. As a matter of fact, next month they're going to name the nominees that will take over from him. And therefore, for now, we should expect that interest rates remain rather stable after this cut until January, right? And that means the dollar will not a slowdown in the cut means the dollar gets stronger. Then if the dollar gets stronger, then for us in Nigeria, where we have been seeing the naira appreciate, and if you see that happen, the naira has appreciated quite sharply. We will probably see a slowdown in that rate of appreciation.
All right, so, still looking at the votes, that's for the FOMC. Definitely there was another dissent this time, and, we did get from the newest man on the panel there. He did say I think he wanted another cut, maybe a bigger cut, at this point. But by what we're seeing, playing out so far, do you think there's another cut expected this year in the U.S.? And if it doesn't happen, what's the expected impact of that?
I think viewers and investors they're all waiting and anxious to say what will the naira dollar rate be. The naira dollar rate in the foreign market today is 14.75. At this time last year it was about 16.50, right? So the naira has appreciated sharply this time. What happens in the last quarter of the year? 3 things. 1, we prepare our budget for 2026. 2, we have the main crop harvest for cocoa, and you can see the price of cocoa is about $6,100. And also, we have the dirty December and the visiting friends and relatives who are coming in, and that's the carry-on of the dirty December. So, we think that people are watching out for. We also have the end of the harvest season, and we've seen price of commodities actually drop. We've seen rice at 72,000 because the Indians have lifted the export ban. We've seen the price of pepper, price of tomatoes, price of plantain and all drop. And so we're having the steady state for now, and which means that the price of data But with the price of petrol now stabilizing and probably coming down a little bit, thanks to the Dangote refineries pledge, we are going to see a very, very active November-December period. So one, prices are down. Two, the petrol price will not translate into higher price and there will be no queues, no queues at the petrol stations. And three, the Naira will appreciate because of visiting friends and relatives for the dirty spending.
Dirty, that's times, maybe times 4, times 3. Mr. Rani, I'm looking forward, to this December, even though I know I'll be working still, but, definitely we'll try and have some fun this time. But, sir, we see President Trump has concluded meetings with leaders from China, South Korea, and other Asian countries. I guess Trump did say that the meeting with Xi Jinping was quite good.
Yes, he said the meeting was amazing, and he gave it a score.
Yeah.
He gave it a score of 12 over 10. It's amazing, but what we are seeing is that the Southeast Asian countries have all come together very sharply to work on something. They know what their interests are, and they believe in the doctrine of permanent interest and no permanent friends. So what we are going to see is a slight reduction in the use and dominance of the dollar in global markets. And guess what? The currency that is benefited from this more than any other country is the Australian dollar, the Japanese yen, and to a large extent the euro. So these are interesting times and totally unpredictable. But generally speaking, we think that globally, after what's happening in Gaza, we think that there's some element of stability and there will be no sharp rise in global commodity prices in the next month or so.
Right, and so also top on the list there, we see the supply growth, money supply growth, that fell 7% year-on-year in September from about 11.66% in August, lowest since 2021. I guess the mopping up activities of the central bank, I guess that's working.
Yes, the central bank has been very, very, very prudent in the way it managed and proactive actually in the way it's managing money supply growth. For it to get to the lowest level since 2021 is significant. Two, there's also high-powered money. So while on one hand, money supply growth has reduced, high-powered money is also being constrained because of the reduction in intervention activities of the central bank. But we are seeing cash. The average opening position of banks is about 4 trillion naira. So what we saw last week was an increase in the treasury rates, and so there is this trade-off between tight liquidity and tight cash. So cash is part of liquidity, but liquidity in the banking system, right, is different from cash in circulation. So all of those things are happening together, and we think that generally speaking, if the money supply growth is constrained and kept in check, that will help to moderate inflation, because inflation was 18.2 and now we are projecting that it could
have join network issues.
They should not understand the condition by which we are doing this. They should be getting us not solved.
So it kind of translates to the decelerating inflation that we're seeing so far. But at this rate, Mr. Rani, do you think in 2026 we might get into single-digit inflation, at this rate?
Right. I think that what we are seeing is a moderation in inflation. But there are fears that if something happens, if the price of oil drops to $60 a barrel and the government's revenue actually begins to decline, then our fiscal deficit the other way. But I think one thing we must bear in mind is that the budget for 2026 is going to be announced any moment from now. And the basic parameters and the assumptions for that budget, which will be the price of oil, and we think the benchmark price will probably be about 65. We think the production levels will be at about 1.6 million barrels, which is OPEC 1.6 to 1.7 million barrels a day, based on the OPEC increases. Therefore, generally speaking, there will be stable macroeconomic conditions in Nigeria, but we have to watch out for the impact of the drop in the price of crude oil, which could actually affect us negatively.
watching that range trade for a while now. It almost gets to $70, then crashes down. That's talking about Brent, and WTI gets below 60, then gets that bounce back up. But we've been trading in that range, most of this year. But looking at the domestic commodities market, what are you seeing coming, sir?
Domestic commodity prices, like I told you earlier, we've seen domestic commodity prices drop, and they've been flatlining. But one of the most interesting commodities is rice, and you can see that there. Rice is at 72,000. We've seen beans at 70,000. And we've seen tomatoes at 65,000. This is goes in the basket. Now, one thing that we've noticed recently is turkey and chicken prices, which are moving in opposite direction. Turkey price had come down, but it's going back up again, maybe because of import restrictions. But generally speaking, we've seen onions stay flat at 140,000 and garri at 22,000. So the price of food in the food basket came down and is staying flat. But what we're seeing is that people are eating less in quantity, and even more so, they are eating less again in quality. So quantity, quality, all falling because the pockets, people's incomes are actually stretched at this point in time. So again, we are waiting for next December that maybe the monies that will come in from our visiting friends or relatives will help show.
I guess, Mr. Ronnie, we're waiting for the I just got backs to come and help us with some funds here. Thank you so much, Mr. Bismarck Ronnie. Always great having you, sir. Thank you so much, sir.
Thank you for having me.
All right, we'll take a moment now. When we come back, global matters. That's in a moment. This way.